Hi guys, it's Stock Curry, and I gotta tell you, I'm really distressed right now. There are so many people who are screwing over retail customers. It's hard for me to wrap my head around it. I mean, I spent years in finance. I've seen it happen. I'm not surprised. It's a little unbelievable to me what's happening right now. It's illegal, and the police force, the SEC, they're not only are they turning a blind eye, but now there's actually talks that they're going to try to come after retail investors. Like, it's insane. I wanted to get this video up last night. I wanted to get this video up this morning, and I needed some time to gather my thoughts because I feel like I tried really hard to explain to you guys on Thursday what happened, just as far as the settlement mechanics and why pretty much every retail investor had to stop allowing new orders on GME and AMC. But what happened yesterday, what happened Friday, that is a completely different story. The only way I can really describe it is retail investors went to war against hedge funds. We went to war against the institution, and now the institution's fighting back. And they're doing a lot of things that are unethical. They're not moral. A lot of things that are illegal just to stop retail investors from playing by the rules. It is really what it is. For those of you who don't know, Robinhood went out and basically told all of their users, there's a list of like 30 securities. And on this list, you're only allowed to buy like 1 share or 5 shares of each. Some of those on that list are heavily shorted stocks that they don't want you guys to cause another short squeeze on. Some of those securities on the list were a direct attack against Chamath. For those of you who don't know, Chamath's a billionaire investor. He's brought a lot of companies public. He's got SPACs like IPOE, IPOF, IPOD. He just brought Open Door public, OPEN. And these SPACs and all, they're not shorted. They're not heavily shorted at all. And yet they were included in Robinhood's list of securities you could only buy one on, because Chamath has come out in favor of retail investors, fighting for retail investors, and attacking Robinhood as well as he should have. And now Robinhood is fighting back, saying, fine, pretty much every single company that Chamath has touched, they're not going to allow you to buy? Like, really? Guys, class action lawsuits against Robinhood are just the tip of it. There are so many more people that are literally screwing you guys over. Market makers. Let's talk about the market makers, right? Like, when you go to buy or sell a stock, there's a spread. So normally that bid-ask spread is $1, and we're talking about fractional pennies. But to make it a little easier to understand, look, nothing in the world is free, right? So when you think you're doing free trading, you're not doing free trading. You're paying for it in the bid-ask spread. So to make the math easy, if the bid-ask spread was $1, let's say it was like a $10 sell and an $11 buy, basically what happens is it goes over to a market maker. The market maker will take your $11 because you want to buy a stock. They'll go sell that to somebody else that's willing to sell for 10, and then they keep the dollar as profit. They then take that dollar, and about a third of that, about 34 cents, goes to Robinhood as their like commission, right? And so that's how you get this free trading. Really, you're paying for your free trades in the bid-ask spread. Now, it's actually a good thing for you, because back in the day, you had to pay like $15 just to trade, to place a trade. So paying for it in the bid-ask spread is actually a lot cheaper for a retail investor. So the problem with Robinhood is the market maker that they go through to actually make all these trades happen is Citadel. And of course, Citadel owns Melvin Capital. So the problem is Robinhood's market maker, Citadel, has an interest to protect their customers. And the customer is not you. The customer is Melvin Capital. So Robinhood was right when they came out and said that they limited securities in the best interest of their customers. But you have to understand that you are not Robinhood's customer. You are Robinhood's product. Robinhood's customer is Citadel. Citadel's customer is Melvin Capital. So because millions of retail investors have teamed up to attack Melvin Capital in a roundabout way, they've teamed up to attack Robinhood. And so Citadel and Robinhood, no doubt in my mind, that they got together and they said, look, we've got to protect Melvin Capital and the rest of our hedge funds. Let's do that by limiting how many shares Robinhood's users can buy on particular securities. That way, you can't cause another short squeeze. Well, doing that completely eliminates the free market. It's illegal. It should not be allowed. So why is the SEC allowing this? Because the SEC doesn't care about you either. They're not on your side. They're on the side of the investment banks and the hedge funds. In fact, there's even talk about the SEC going after Wall Street bets. So why would any of this allowed to be take place? Like, isn't the SEC supposed to be a police force, supposed to keep the market fair for everybody? Yeah, in theory. But let's talk about reality here. Who is the SEC? Who are the actual people that work there? They're old investment bankers. They're old hedge fund managers. They got friends and buddies and all these investment banks and hedge funds. So, of course, they're going to protect hedge funds and investment banks. Back on Thursday, the SEC should have stepped in and they should have suspended trading on GME and AMC and other securities for everybody across the board. But they didn't. They allowed the clearing firms to shut down the buying of securities for retail investors, but then they allowed hedge funds to continue to short them. They didn't protect the free market. The SEC didn't care about the free market. Only now it's getting even worse. Because now your broker, Robinhood, has teamed up with Citadel, their market maker, to stop you guys from causing another short squeeze. Why? To protect Melvin Capital and other hedge funds that Citadel owns and it is invested in. Wall Street Bets started a war against hedge funds. And it looked like Wall Street Bets was winning that war. Hedge funds, some reports say that they lost $70 billion. Of course, money doesn't just get lost. It gets transferred. $70 billion got transferred from hedge funds to retail investors. Bravo. Great job. But now, the hedge funds and the institutions are fighting back. And they're saying, we're not going to put up with this anymore. So come Friday and this weekend, it looks like the hedge funds are winning. It looks like retail investors are losing the battle. But we got options, don't we? We're not giving up this fight. We're not giving up this battle. We're not going to let these hedge funds screw us over. So what do? What's the answer? It's easy. You drop Robinhood. You drop anything that has to do with Citadel and that market maker. And you switch brokers. You switch to a broker that's going to allow you to trade whatever you want with as many securities as you want, as much volume as you want, and you keep up the attack. Now, you guys know that I'm a big advocate of Webull. I love Webull because they give you 4 free stock when you sign up. You got 1 day left to do that, by the way. Use my link in the description below. But I also love SoFi because Chamath, his IPOE SPAC, is actually bringing SoFi public. We're going to talk about that a little bit later when we get to our stock picks. Either one, honestly, look, I get a free stock every time you guys sign up for Webull. Okay, but I'm an honest guy. I don't need your money. I want to keep it straight with you guys. SoFi is backed by Chamath. So if you choose SoFi or you choose Webull, either one, you're gonna do great. Okay? I don't know. I might get a referral link up for you guys for SoFi. I don't have one yet. I'm just trying to be honest with you guys and hit it to you straight. I want your best interest in mind. I want you guys to be able to continue the fight. So if you're still in Robinhood and you're getting screwed over a bit by them right now, it's time to switch. You got 1 day left to sign up for Webull and get 4 free stock. With SoFi, I think you've got to deposit $1,000. Webull, it's only $100. But they're both great companies. There's a lot that I want to say. There really is. But at the same time, I understand that I'm on a public platform. And I understand that what I say gets spread, gets used. So I've got to be very careful with the words that I use. Yeah, I can't say everything I want to say. I wish I could, but I can't. And I'm mindful of that. And I didn't do a good enough job on Thursday expressing my frustration, expressing my anger. And I apologize for that. Right now, there's just so much going on. Retail investors are being attacked from every side, from their own brokers, from the SEC it's supposed to protect them. Retail investors are getting attacked from everywhere because we're disrupting the industry. It's a good thing. It's a great thing. I mean, what is the solution? I don't know. Maybe we eliminate short selling in the United States. We eliminated naked short selling back in 2008. Maybe it's time to eliminate short selling altogether. I don't think it'll happen, though, because there's too much money at stake. There's too many hedge funds shorting stocks, making way too much money. So no, I don't think that's going to happen. I think what is going to happen is the SEC is going to implement a bunch of new laws and a bunch of new restrictions on retail traders. I think the end result here is that retail traders are about to get screwed over even more than we are now. It's not right. It's not fair. That's the game we play. Look, I'm a man of action. Best thing you guys can do at this immediate moment is switch brokers. Get off of Robinhood if you're still on it. Come Monday, we'll talk about what's next. For right now, I'm lost. I don't really have the words to say. I don't know how to respond in a way that's proper and professional. I'm really, really angry right now. I'm really, really upset that our government, SEC, is not protecting us and they're attacking us and they're allowing all these companies to screw us over. Richard Allen and Dead Inside both uploaded videos Friday night that really expressed their anger and their frustration and all the dynamics in a really, really good way. If you guys want more information on what's going on, if you guys really want to understand how this is affecting people, go watch Richard Allen's video and go watch Dead Inside's video, because they really did a great, great job of kind of summing up what's going on. For right now, let's just get to what we do best on this channel, which is stock picks. For a long time, we analyzed the top 15 YouTubers, but you guys have overwhelmingly asked me to give you more of my insight and my opinion. So what we're doing is we're cutting down from the top 15 YouTubers down to the top 10. And what that's going to do is it's going to allow me to spend a lot more time analyzing stocks and giving you guys my own stock picks. So once this video is over, go over to the community tab, and I've got a bunch of polls up there. I want you guys to vote. We're going to be putting polls up there every day, just adding more polls. And we're a community. We're all one here, okay? The 10,000 or so of you that watch each of my videos, we're going to collectively decide who the top 10 YouTubers are. A lot of you guys said, Scott, you decide. You just do it. Well, that would be easy, but I really want your input, okay? This channel's for you, so I want you to decide who the top 10 YouTubers are. Now, for those of you who are new to this channel, I analyze stock picks from the top. Well, right now we're at 14. Tomorrow we're going to be down to 13 YouTubers. I compile all of my analysis into a daily video that I post right here on this channel. I spend hours every day watching YouTube videos so that you don't have to. All you have to do is watch one video each day, and you're going to get every single stock pick from the top YouTubers. All I ask in return is that you hit that like button and subscribe so that you can get notified when I release my next video. In fact, I'm going to give you 5 seconds to do that right now. All right, before we get to today's stock picks, I just want to remind everyone that I'm not a financial advisor, and none of the YouTubers I follow are financial advisors either. Today's video is purely for entertainment purposes only. For those of you who are wondering, we are currently using the Webull desktop app, and this is the app that I use for all of my trading. It's also the app that I use in all of my videos. All right, let's get into today's video. All right, first up is Aal American Airlines. Now I'm showing you guys the 5-minute chart because I want to show you guys what happened in the pre-market on Thursday. ZipTrader showed us that during the pre-market Thursday, Aal ran up massively. It actually got near Chris Sain's old price target of $32 that he had given up on. Now, if you were holding Aal, you could have made a lot of money selling in the pre-market Thursday. Of course, if you don't have access to pre-market trading, because you're still in Robinhood or something like that, you're going to want to switch to Webull so you can access pre-market trading. All right, next up is ALUS. ALUS is a SPAC, and they're merging with Freyr. Freyr is a Norwegian-based developer that will be making clean lithium-ion batteries. The merger is expected to take place in Q2 of this year. Tech Conversations let us know about the SPAC yesterday. Keep in mind that most SPACs have a floor of $10, so this one is actually cheap. Next up is ATOS. This is ATOS Therapeutics, and they're a pharmaceutical company. Ken and Grace let us know that a new study came out that ATOS released where they found with a 98% confidence that the virus that caused the pandemic was made in a laboratory. Now, there's always been speculation, but this pretty much confirms it. While this won't change ATOS's financials directly, it will bring good press for ATOS, and that in turn could result in new clients down the road. I also wanted to let you know that I had a buy under price on ATOS of $3 with an ideal buy-in price of $2, and that it is very close to our ideal buy-in price right now. I also have a $5 price target, which would represent a 126% upside from today's closing price. Now, for those of you wondering about how I do price targets, the buy under price is the price that you do not want to buy a stock if it goes above that price. If it goes above and keeps going up, don't worry about it. Move on. You missed it. There's 7,000 stocks you can trade. Just pick another one. If it gets below the buy under price, that's the price at which you want to be buying. The ideal buy-in price is the perfect price to buy it at. That's the price that would be ideal, typically where I expect a bottom to be if we get a sell-off. And the price target is the price that you want to sell at. So if you do decide to buy the stock, once it hits the price target, that's the price that you want to consider selling. Of course, there's a couple of different ways you could sell. You could either place a limit order that will just automatically sell once it gets to that price, and then you don't have to worry about it. Or you can wait for it to get to that price and then place a trailing stop so that if it drops, say, 10%, it'll automatically sell. Or you could sell half of your shares at the price target and then keep the rest and sell them a little bit later once it looks like it tops out. Okay, next up is BIOL. This is BIOLACE, and they're a dental medical device manufacturer. They make dental lasers for cosmetic, restorative, and surgical applications. Jack Spencer reminded us that everybody is selling penny stocks to get into GME, AMC, and others. That means penny stocks are cheap right now. BIOL gave preliminary Q4 results. They are expecting Q4 growth of 26 to 31%. U.S. revenue exceeded prior year revenue despite shutdowns. They also have added new customers. All of that is good news. With any penny stock, growth is more important than financials, and this company is growing. Combined with a recent pullback, this is one you'll want to research. It might continue to go down during the current market correction, but keep some cash available because penny stocks are getting cheap. Next up is Bngo. This is Bionanogenomics. Ken and Grace let us know that Bionano released news that the Children's Hospital of Los Angeles found that Bngo's Sapphire machine detects treatable gene fusions in pediatric leukemia that other machines missed. Proof that Bngo's Sapphire machine is better at clinical work than the other machines most doctors are using today is huge news. Over the past few weeks, we have seen more and more studies finding that Bngo's Sapphire machine is the best machine for clinical work. So it's no surprise that Wall Street analysts, who are normally conservative, are rating Bngo a buy with a $14 price target. On Thursday, Bngo dropped below my buy-enter price of $10, but I do not think it is going to get that low again. So I'm raising my buy-enter price to $11 and my ideal buy-in price to $10. And I do like the stock for a long-term hold. Next up is CCIV. This is a SPAC and they're rumored to be merging with Lucid Motors. Lucid Motors is an American EV company and a competitor to Tesla. ZipTrader mentioned CCIV and said the news of a possible delay in negotiations doesn't really change anything. This is still a rumor play, and nothing has been confirmed yet. StockMo is hopeful that we'll hear something about the merger this weekend or Monday, but thinks that if the talks are delayed, we might have to wait one more week. Jack Spencer also talked about Lordstown Motors' business update. He got excited about how Lordstown Motors is growing, but the reality is, CCIV isn't moving based upon Lordstown Motors right now. It's moving based upon whether or not a merger will go through. So I would recommend ignoring any news about Lordstown Motors until a merger is confirmed. Just focus on news and rumors of the merger for now. Also, this is one of the stocks that Robinhood restricted trading on. So if you're on Robinhood, I think there's only one share per account that you can buy of CCIV. That will probably put some short-term downward pressure on CCIV, so just be aware of that. Next up is CLII. This is a SPAC and they're merging with EVgo. EVgo is the nation's largest fast-charging EV station company. This is a competitor to ChargePoint, currently under the SPAC symbol SBE. Ken and Grace recommended CLII again today. He stressed not to get caught up in any one company and to diversify. So he said if you like the EV charging station companies, you should own both SBE and CLII. I'm going to put our buy-under price at $20.50 and our ideal buy-in price at $19.50. Just be aware that if CLII drops too far below $19.50, say to around $19, then it could continue to drop, possibly all the way down to $14. So be careful. You might want to put a stop loss at $19. If you do get stopped out, keep this on your watch list and look for a bottom to get back in. Next up is CLSK. This is CleanSpark and they're a Bitcoin mining company. My financial friend believes a lot of people will move over to cryptocurrencies. This could have potential if people start fleeing stocks and getting into cryptocurrencies. As a side note, I'll let you know that Larry Jones and many other people are also expecting cryptocurrencies to take off, so this might be one you want to keep your eye on. Next up is IPOD and IPOF. IPOD and IPOF are SPACs. They have not announced merger targets yet. ZipTrader said earlier in this week that he wanted IPOD and IPOF to be cheap before he bought, as in below $14 or $15. That happened yesterday and Thursday. ZipTrader said you could continue to buy the dips, but did stress that there is no urgency on these until after a merger is announced. I will also add that IPOD and IPOF are two more securities that Robinhood is restricting trading on due to the fact that Chavaff owns both of these SPACs. Next up is IPOE. IPOE is a SPAC and they're merging with SoFi, which is an online lending startup. SoFi is a competitor to Robinhood, and with everybody jumping ship from Robinhood, the stock was up quite a bit today. IPOE is also led by Chamath, a billionaire who has been very outspoken about what Robinhood is doing, and one of the main reasons why Chamath's companies are being restricted on Robinhood. Those include IPOD, IPOE, IPOF, OPON, and many others. I think the fact that Chamath is standing up for retail investors is making people want to use the SoFi platform, and that makes sense. So you might want to consider investing in IPOE because it looks like SoFi is about to get millions of new customers. Next up is Macy's. Chris Sain said it is going to get back to $20. If you didn't get a chance to sell at $20 last time, you're about to get a second chance to sell at $20. If you're still holding M, set a limit order for $20 and change the time from day to GTC, which is good till canceled. That way M will sell automatically once it hits $20 and you won't have to watch it. Next up is MARA. This is a Bitcoin miner, and Larry Jones bought MARA today. He thinks current levels are going to cause retail investors to lose confidence in the stock market and move to cryptocurrencies. He thinks a rise in cryptocurrencies will result in a rise in the price for MARA. ZipTrader also thinks MARA will go up as Bitcoin picks up, and I also agree. Next up is NIO. This is NIO, and they're a Chinese EV manufacturer. StockMo says he does not expect big movements in NIO until next quarter, and especially Q3, once things start getting back to normal in China. Next up is NNDM. This is Nano Dimension. They're a 3D computer chip manufacturer. ZipTrader said it is totally reasonable to buy NNDM at dips. Personally, I think NNDM will still go down a little bit more. It is under my buy-ender price of $15, but not quite yet to my ideal buy-in price of $12. Next up is SOS. This is Sos Limited, and they're another Bitcoin miner. Mcash let us know that they just announced that they have added a Bitcoin mining segment to their business. As Bitcoin goes up, this might be another alternative to MARA to consider. Next up is TSLA, Tesla. They're an American EV manufacturer. StockMo said Tesla missed on earnings, combined with profit taking, and this pullback is to be expected. But StockMo thinks TSLA is still going to go up by the end of this year. Next up is UWMC. This is UWM Holdings Corp, and they're a wholesale mortgage company. Larry Jones had this on his watch list. He wants to buy it, but he's waiting for the dip to bottom out. Next up is XL. This is Xlfleet. This company converts gas cars into electric vehicles. ZipTrader thought this would get to the lows $20 before rebounding, but it's actually gone below that. ZipTrader said he's going to wait until after earnings to decide whether or not to buy in. Just keep in mind that Smart Trader let us know that there is a pretty high short float in XL, so this is also a short squeeze candidate if retail investors can rally behind it. Unfortunately, retail investors cannot rally behind it because Robinhood has limited trading on XL to 1 share. Also, please get off Robinhood. They're screwing over everybody. All right, guys, I hope you enjoyed this video and got a lot out of it. Comment down below what your thoughts are on the attacks that have happened against retail traders over the last few days. I want to know what you guys think about Robinhood stopping investors from buying over 30 different stocks. And if you want to get some free stock, sign up for Webull in my link through the description below. Tomorrow, Sunday, is the last day to get 4 free stocks when you sign up and deposit $100. You literally got 1 day left. Finally, remember to hit the like button and subscribe if you haven't already. I hope you guys have a lot of success trading. I will see you guys tomorrow.